All right, guys, we are at it for real this week. What publishing is going to be graded, and we're going to be working on the on your own problems 14.3, 14.4, and 14.5. We'll do 14.6 next week because that's a little more intensive, but I want to get you through the remainder of the adjusting entries. And we're going to be looking at adjusting entries for merchandise because we bought and sold through the course of the year. We need to make an adjustment for that. Then we need to go in and take a look at uncollectible accounts because when we sell on credit, there's always a percentage that we'll never be able to collect for a variety of reasons. Finally, we need to go in and depreciate our durable assets. So we'll have our current assets and we'll have our planned assets that we'll need to take a look at. So let's get right to work here. I've organized the materials a little differently. What I've done is I've got a PDF attached that has the 3 relevant chapters to make it a little easier to work with. You have each of the PowerPoints here. We'll start with 14.3 in a second. And I've also developed a spreadsheet. I want you to use the spreadsheet rather than the PDF versions of the workbook. It's just going to make all of our lives easier. This way you pull it up, you edit right in there. The formulas are in there. You just go through and you plug in the number in the correct cell. The one thing I am going to insist on is that you cross-reference using the alphabetical character, and I'll show you what I mean once we get there. So for now, what we are doing is we are going through and I'm going to familiarize you with the worksheet I want you to use here real fast. So we'll pull this up in Excel. And it duplicates exactly what you've seen. So I've got it completed through 14.2. So when I say alphabetical character, I mean alphabetical character. You got to cross-reference because we're going to be adding quite a few of these adjustments. And if you don't do this, you're going to get confused and you're going to enter stuff on the wrong line. Now, what we've also got to do here, oops, I forgot to fill these in. I'll do that and publish the right one here in a second. So what we've got to do here is also use the income summary account. So let's go ahead and get into this. So for the book, I want to go through a couple of things. We got a new term here, merchandise inventory. It's a general ledger account, and we've got to adjust it down because we sell stuff. That's what we're in business to do. And we buy stuff to replenish it. Now, what we're doing here is we are doing an end-of-year worksheet, which means that we've got to adjust it for the end of the year. So merchandise inventory is an asset account, which means debit normal balance. Okay. So we don't enter, for the purposes of what we're doing here, we're not going to bother to enter changes every time we buy and sell something. That's inefficient. We just want to know where we start here on January 1st and where we end up. So remember, this is a full year. The actual accounting for this is extremely easy. So the 2 accounts affected are merchandise inventory. Okay, so here in our trial balance is the starting balance. And we go through and we do an actual count. We do a physical count of what we have left. So actual count is valued at, and you're going to see it in the work together and on your own problem stated as actual count. Okay. So just like we decrease the value of insurance and supplies, we've got to do the same thing here. So what we're going to do is, since we ended up with less inventory, we started with $140,000 odd and we ended up with $124,000 odd. We're going to need to decrease it, making a credit entry at the top in the credit column. Okay, but we don't have an expense account set up for this. All right, merchandise is not an expense. Remember from chapter 9, we record this stuff on the purchases journal. Okay, so we're netting out the purchases journal here. Okay, so we have to draw this down using the income summary account. So in the event we have a net decrease in inventory, we make a credit entry here for merchandise inventory, and then we make a debit entry on the income summary account. Here's the analysis using the T accounts, okay? So we're using income summary. This is where income summary becomes very, very important. All right, so the instructions are here in the book, and let's go down. Take a look. What happens? Well, what happens if we end up with more inventory? What if we have an inventory increase? And how do we record that? Well, very similarly, trick is our entries are going to be a little different. So in this case, this will be the first time that we would increase our inventory. So if we're looking at if we're looking at the entries here for this, what we're going to have to do when we actually do this is we're going to make an adjusting entry in the debit column on the top next to our inventory. And then we're going to put a credit in the income summary account. So you may run into a circumstance that you're doing this, that you have to increase the value of your inventory. And you do that making a debit entry in the merchandise inventory account, not a credit entry. Okay, so you may run into that. And it's actually more common, and I actually expect to see a lot of businesses have to do that for real this year. Okay, so PowerPoint's up here, basically demonstrates the same thing. So here's the information published. This is quick. It's easy. This is not hard. I don't expect you to have any trouble with it. So let's go in and look at the On Your Own. Now I've got the answer keys to the On Your Own's published. So use them if you have any questions. So our merchandise inventory here, 14.3, Coastal Aquatics. Okay. So let's pull up the instructions. Physical count of merchandise inventory, we have $23,904, 20 odd cents. Okay. Which is more. So now it's not more, it's less. So what we're going to do here is we're going to go into merchandise inventory, and we're going to make an entry right here. So we have to depreciate it. We're going to use that term depreciate, 13,848, because that's the difference, 13,848.05. Okay, and you're going to put a D right here in this column. Make sure you have the D right here in this column. Okay. A, B, C, D. All right. Then we're going to make a corresponding entry here on income summary. So this gives us a lot of hints. So 13,848.05. Boom. We are done. All right. So I'll make another one for 14.4 here in a second.